Hey guys, back here again. So this time I wanted to talk about what makes the stock market go up, what makes individual stocks go up, as well as overall indexes go up. So and that is what we're in right now, and it's earnings. Earnings, current earnings, and future expectations for earnings help move the market higher, and they are the bottom line. They are the determining factor in making the market move higher. So I wanted to make this video because right now we just started earnings season and we started with the banks. It looks like the banks are doing well. So basically, a couple of things you want to look at is if they're beating their expectations on earnings per share and on revenue. There's a whole bunch of numbers, but their top and their bottom, how much they're losing, how much they're making, their overall profit, etc. So it looks like the banks have done well. They're beating their expectations. There's analysts that cover all these companies, multiple analysts. They come up with a consensus on their earnings expectation. And as long as companies are beating those expectations, beating on revenue, beating on costs, and beating earnings per share, those kind of numbers, as long as they're beating the expectations for those numbers, and the price of the stock, individual stocks will go higher, and overall the indexes will go higher as well. So now when you're talking about the market, there's a lot of worry. There's all this constant worry in the market. So some of those things that we're worried about is inflation, supply chain, which ties in with inflation, supply chain issues. You can talk about geopolitically with countries like China. You can talk about tax hikes, expectations for those to happen, federal rates. So all of those things that they're worried about, they're going to affect earnings. They're going to have some effect on the profitability of companies. So the problem is if you start worrying about all those things, that if you listen to CNBC or watch CNBC, Bloomberg, read all this financial news, you're going to get so concerned. Or if you watch YouTube, you've got a lot of people here talking about how a crash is inevitable. There's no way to determine when a crash is going to happen. But you're going to have this worry all the time, and if you listen to all that, then you're never going to want to invest. And my thing is that if I try to tell people that if you thought about investing 10 years ago and you didn't, look what you missed out on. So you can't let those things affect you in such a way that you become afraid, that you're not willing to take risk. Now, I talked about this in other videos that, to start a business or something like that, you've got to take risk. And risk does equal reward. So investing is the same thing. Now, we can limit our risk. We can invest in certain things. And I'm going to talk more about that. What do I look for specifically? But I want you guys to see earnings season. I want you to see what happens during earnings season. Listen, maybe get a chance, listen to some of the calls on the bigger companies, maybe Tesla, that's entertaining, Apple's entertaining. See what they have to say. So based on what their numbers are and what they say, the stock will react in either a negative way or positive way. But oftentimes it can be an overreaction in either way. So me personally, I'm looking for overreactions in negative, like in stocks that I liked. Even it could be Apple. So Apple is the biggest company in the world. Apple's not going anywhere. They're continuing to grow their earnings, and they're constantly innovating. So with a company like Apple, I'm not concerned that they're not going to keep growing. At some point, they may stop. However, I think they've got a lot of innovation ahead of them as well. So one thing that will affect them is, let's say they got a because of supply chain, they've got to delay their iPhone release. I don't know if they have an iPhone coming out or not, but they might have to delay it 6 months, so that's going to affect their future earnings. So the stock price now is going to be reflected. So maybe you might have a 10% drop or a 5% drop. Not saying that that's going to happen, but that's a potential to happen in any of these companies. They might say something that they're going to be affected in some way negatively, and the stock will react to a negative news like that to the downside, obviously. But in my opinion, they generally overreact. And in those situations, you might have a company that, has a lot of growth, a lot of innovation, and all those things, but it might pull back 20% just in because of something they said in earnings, or they and a lot of companies will sandbag. They won't want to say what they actually, they're going to meet a certain revenue expectation, but maybe they say, well, we might not meet that expectation next quarter. So then they will get slammed. That happens pretty often. So earnings, in my opinion, aside from like a crash happening, earnings, overreactions on earnings to the downside is the best way to take advantage of some volatility in things you like. So I would expect, and that can happen on the other side too. Maybe if they beat expectations by quite a bit, then the stock is going to reflect that. So that's a positive news. So it might go up 10%. More likely, things are more dramatically volatile to the downside. So you'll see more opportunities in buying in that way, because there's just more overreaction to the downside, I'd say. But if you're not currently invested, if you're not on an app or on something, I would recommend that you watch some earnings calls. So after the bell, so I'm Central Time here, the market closes at 3 o'clock. There will be a lot of earnings coming up at the end of October. I think maybe like the 26th, the 28th, those like Apple and Amazon, they report around that time. I would watch those stocks. There will be buying opportunities. There will be some buying opportunities somewhere. So I have a watch list, and I watch these things. And if I noticed any dramatic decreases in the after hours when earnings happen, I'm going to look at and kind of see why. And if I feel like it's an overreaction, then I'm going to buy more. And these are the things that I already own, companies I like. So if you're not invested, if you're not in an app, I just have Robinhood, simple charts. We're not getting too complicated here, but I will still show individual stock charts, and like I'll go through some earnings and stuff like that in future videos. So I encourage you all to invest, even if you have $10 a week or $100 a month or $50 here and there, whatever it is, any amount. I would encourage you to invest. But what I want to do is teach people what I've learned, and I've done pretty well in the strategy that I use. I'm not on all day long. I do watch it on a daily basis. I do know what's going on, but I'm not trying to day trade. I might do some swing trading. Day trading is very complicated. It's difficult, and it gets complicated, and you need quite a bit of capital, to be honest with you, to be able to do that, to make any kind of money. It's much better to look for opportunities. And earnings season is a major opportunity. I've not had anybody tell me this. This is what I've found on my own. This is just by watching every earnings season, since I've started, that this is the best opportunity. And also, you can't get wrapped up into believing what you hear or see. It's more about the numbers. more about what these companies are reporting. So just, you can't have this, again, I mentioned this before, you can't have this mentality that everything is risky, that opening a business is risky, that starting and investing in the stock market is risky. Yeah, there's a risk to it, but also it's true that no risk, no reward. And I want to be financially independent. I don't want to be reliant on someone to give me a paycheck, and that's my ultimate goal. And I think that whether you have that goal or not, you can be more free. You can feel more free if you have these other income streams coming in. So, and you can take care of yourself better if you have family, whatever. You can take care of everyone better if you have more financial freedom and more income streams. So part of the thing is with what I'm talking about, when I'm talking about flipping things, that's an income stream for me. And I talked about trading cards. Now there's different revenues that I have for my trading cards, and then the stock market. If you want to have, this is a legitimate income stream, and you could do quite well. You just have to pay attention to what's going on, and if there is opportunity, you have to try to take advantage of that opportunity. So that's what I'm going to try to teach here. I hope you guys stay tuned. Stay tuned for more. Like and subscribe, and let me know what you think in the comment below. Thanks for watching.